Yesterday, both the euro and the British pound extended weakness against the US dollar. Downbeat data on German industrial production once again confirmed big challenges in Europe's largest economy. Besides, market participants received their latest figures on economic output and employment change in the euro area. The Eurozone GDP growth rate for the second quarter was revised down to 0.1% quarter-on-quarter from 0.5% in a yearly comparison. This raised expectations that the European Central Bank might pause its rate hiking campaign at the next meeting along with the Federal Reserve. Traders also digested statistics from the United States. Initial claims for state unemployment benefits fell more than expected, which added to pressure on the euro and the pound sterling. Furthermore, the market took notice of speeches by Fed members. Some officials highlighted the need to fight inflation further, while others expressed willingness to pause monetary policy tightening. And now let's take a look at today's macroeconomic calendar. Germany has already reported data on inflation. On a monthly basis, Germany's consumer price index rose by 0.3% in August, matching analyst forecasts. The annual consumer inflation came in at 6.1%, also in line with initial estimates. Data shows that the increases in prices exceed overall inflation and keep the inflation rate high, thus boosting expectations that the ECB could end its interest rate hiking cycle. In addition, Fed Vice Chair for Supervision Michael Barr is set to speak today. What's more, traders will receive statistics on France's industrial production as well as European Union economic forecasts. However, these reports are unlikely to have a severe impact on market sentiment. Thus, the risky assets have every chance of recovering as part of a bullish correction. From a technical point of view, a decline followed by a false breakout at 1.0709 will create a buy signal. In the meantime, the euro-dollar pair is trading upwards, heading for the resistance level of 1.0748. If the price fails to consolidate above this mark, a sell signal will be generated, thus bringing the euro down to 1.0725. In case the price overcomes 1.0748 and edges higher, it would be a wise decision to go short on a rebound at 1.0772, counting on a decline of 20-25 pips. As an alternative, if the price goes down and fixes below 1.0709, the euro will extend losses to 1.0669 and even 1.0637. However, given that the European currencies spent the better part of the week trading downwards, the most likely scenario for today suggests a bullish correction. Long positions can be considered amid a false breakout at 1.0669 or on a rebound at 1.0637, with a view to catching an intraday correction of 30-35 pips. Speaking of the British pound, I recommend going long amid a false breakout at 1.2484 or on a rebound at 1.2444, trying to catch an intraday correction of 20-25 pips. A recovery followed by a false breakout at 1.2527 will make it possible to sell the pair, dragging the British pound back down to 1.2484. Short positions on the rebound can be opened at 1.2564. In this case, one can count on a dip of 30-35 pips. Good luck and have a nice weekend.